Hey everybody, and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse, and today I thought we would focus a little on Tattoo Chef's earnings yesterday. I'm not sure if you were part of the live stream with me and Emmanuel on his channel, but I still thought that it would be good to just summarize what we talked about a little and maybe give you some own opinions on that. But before we get to it, as always, I would appreciate an early thumbs up to help spread the video to more people out there. And if you want to be part of the channel and get more news and analysis on Tattoo Chef and other plant-based companies out there like Beyond Meat, Oatly, the very good food company to name a few, make sure to subscribe and don't forget that bell button. And if you also want to be part of our great free Discord channel where we talk about these companies, take a look down in the description. It's a great bunch of people. All right, guys, thank you. Well, to start off with, I must say we have some very exciting news here. The market's been open 1 hour and 15 minutes, and just an hour ago, we didn't see anything like this, and it's actually up 16% right now at $18.5, and it was trading around $15 to $16 just recently, right? So quite surprising. Actually don't know what's going on at the moment, and when we find out more, I'm sure me or any of us who covered the stock is going to come out with the info, probably me as well. And one speculation from me could be that we might see more institutions going in at the price that we saw yesterday. We did see probably some institutions actually selling out, because I think it's been up to like, now it's 17% of the shares being held by institutions. And not long ago, I think a few days ago, was up to about 17.7, something like that. So it seems like some of them have sold out. But now I imagine maybe there's a possibility that some are actually moving in, looking at the prices, and do see that there's still a lot of positivity here. But as I'm sure you know, there was some negativity yesterday regarding their earnings because they didn't reach the goals that a lot of people were hoping for. Now, we can't see what they were actually expected to get from the two analysts who actually cover them, but they were hoping for around $64 million, $63.9 million. So they didn't get close to that. Actually, as I'm sure you know, they got about $58.8 million. So they basically missed it about $5 to $6 million there. And that's usually a really big miss to some extent. But we have to remember there's only two analysts at this moment who's covering it. I'm sure we're going to see a big change in that in the next year or so. But right now, only two people covering it. So really, what kind of accurate perspective can we get from only two analysts? Well, that's going to be hard, right? So, but the good thing here is, I mean, given the macroeconomics, right, what's going on around the world, it is still an increase of 44% year over year, right? And the branded revenue increased about 56%, which was $35.3 million. And that's what it's all about. As we know, branding is everything. So again, if we just look at the financial highlights here, so about $60 million, and 43.5% compared to 41 million in the year prior, right? So it is definitely growing here. Now, the thing that is a little scary, I think, to some extent, but again, given the market, given what's happening, maybe not so strange, is the gross profit and especially the gross margin then. That was only around 10.1% compared to the last year, which was actually a little higher, 10.3%. And if we compare it to the quarter not long ago, well, it was around 15 to 16%. So it's actually gone down. But we're going to talk a little more about what's the reason behind that. And then the net loss was 8.2 million compared to 3.2 last year. Adjusted EBITDA, 5 million, negative 5 million compared to 1.6 in the year before. So if you look at the financial highlights for the first 9 months of this year, they're up now to about $162 million, which is an increase of 50% year over year, right? So 48.7%. So still amazing numbers given what's happening, right? And that this is such a new company. And then when it's the Tattooed Chef branded products revenue, was an increase of almost 72%. And gross profit right now, 13.4% for the whole 9 months, right? Compared to 17.3 million that they got, which was 15.9% gross margin, right? So quite close, but still a little less. And a net loss overall of 70.1 million compared to a net income. But I think the details here has to do with the net loss, as we saw in Q2, where they had a specific debt that they had to pay there that I think was around $50 or $53 million. Now, if we just look at the gross profits here, right? One of the reasons why it's actually going down right now, and they do talk about that here. As they state here, the slight decrease, and I do like this word here, the slight decrease. I mean, it's a 30% decrease. So in my eyes, not so slight, but it is the gross margin for the 3 months ended in September 30, 2021 was primarily due to the increase in raw materials, packaging, and freight and container costs due to inflation. As we know, the inflation is up to 5 to 6%, which is really high, as well as the 2 facilities in New Mexico, which the company refers to collectively as we know, Foods of New Mexico, that were acquired by the company in May 2021, partially offset by the achievement of economies scale from the increase of TTCF sales volume and improved production capacity. And that has to do, obviously, that the margin might have actually been worse if it wasn't related to that this company is a vertically integrated business, right? But we have to think about this here again, what they talked about here, freight and container costs, right? As we've talked about in the live stream yesterday, and we talked about it on this channel before, it used to be just a half year to a year ago that freight costs were about $2,000 to $3,000 per container, and now it's basically up 5 times. So that's going to be a huge difference, especially considering that they get most of their raw materials and most of their produce from Italy, right? That's a long way to the US. And considering that they're going to have to pay a lot of shipping costs, right, and a lot of container costs, that could definitely impact the overall gross margins. And as we know, the operating expenses here, that's something you want to keep an eye on too, right? Because you want that to decrease with time, which normally when it's a really successful company, they will actually start to decrease. And not only that they're not using them more, that they're not paying more, to some extent, but the revenue is actually covering that. But here we see that it's an increase from 6 million to 13.6 million in the 3 months ended. But what I do like is that they state here that the company expects operating expenses to decrease as a percentage of revenue over time, as many relatively fixed operating expenses will be spread over increased revenue. And if we just take a quick look at their cash position right now, they are trading, or they have around 130 million left. So they're good to go whatever happens in the market now in the next couple of years. But I think one of the things that actually scared a lot of people yesterday, apparently not right now, is that they have to lower their prediction for the year, right? Now, the prediction, as we know, has been that they were going to be close to 240 million, according to the 2 analysts, right? 239.4 million here. Here, they have actually lowered the expectations to range around 210 million to 215 million. Now, that's a decrease with 25 to 30 million if you compare it to analysts, right? And that's obviously quite low, but not surprisingly when we look at Beyond Meat and Oatly, they've done similar things. And that is because we don't know what's going on in the market right now. So here, that's still an increase of 41 to 45% compared to 2020. So they're still growing like crazy here. Now, I also just want to point out that I think one of the reasons also that the revenue isn't higher than we hope for. I mean, again, there's a lot of reasons when it comes to inflation and the uncertainties in the market, right? The shipping costs and so on. They haven't been spared like most disruptive companies, right? But one of the reasons I think is also that Kroger, the Kroger deal, which is a huge deal. As we know, they've gotten now to 13,000 locations, right? Retail stores, which is incredible numbers since they expected from the beginning, like a half year ago, only to be at about 10,000 stores by the end of the year. And already in Q3, they're at 13,000 stores. So guys, again, a great achievement here. But the Kroger deal, which is 1,800 stores in itself, right? And I think in total, they're going to have about 7 to 12 products or SKUs in every one, which is a lot as well. As we know, that didn't start to happen until September, which means we won't see very much of that revenue in the Q3 as we've seen so far. So the question is, will we see it in the Q4? Will it be a lot higher? Well, we're going to talk about that. But also another thing here, as you see that they've had discounts, I think they're actually not as good now as they were before, but they have discounts at Kroger's, at Target, and different stores. We talked about that back in September, back in October. And obviously, discounts is something that I think is positive in the long run, right? Because you want everyone to be aware of your company, right? You want to get that name out there, especially as a new company, so people actually try out your product. Hopefully that it's even cheaper or at the price parity to the other products that people are used to, so they feel there's a interest, there's a need to try these products. And if they're happy with it, they will be repeat buyers, right? So I think that's a strategy that most companies would do, especially when they're really expanding fast. But obviously, when you have discounts on your products, you won't have the same kind of revenues, and you definitely won't have the same kind of margins. And that could also be, in the long term, one of the reasons why they have lower margins right now. And as I've stated many times before, like we know in the Q2 results, which people weren't really happy about either, well, we know that there was during the summer holidays, right? When people started going out to restaurants, been taking their vaccines, so people don't want to sit at home and eat as much frozen food, right? And I think it could be part of it here as well, because the Q3, that's July, August, and September, right? Which means that that's a lot of summer months as well. So I do believe there's a chance that people's been out eating a lot more anyhow. Now, something that struck me here is that, as they stated here, right now revenue is around 162 million, right? And they are expecting, when it comes to their outlook, to be around 210 to 215 million. Now that tells us that means that they're probably expecting only to get about 50 to 55 million more in revenues, meaning less than now. So should that be a warning signal? Actually, personally, I don't think so, because I don't think it's so strange, given that what's coming up now is Thanksgiving, right? And then we have Christmas and New Year's Eve. I don't think most people are going to think about eating that healthily during that time, right? That's not the time to think about being healthy. A lot of people eat fattening food. They definitely eat a lot of meat, right? So, and dairy products of different kinds. So they're not going to start thinking about, I'm going to try the vegetarian food now or the vegan food. I don't think so, actually. So people go to what they're used to. So I think it makes sense that they would actually get less revenue then, given also the uncertainties in the market with all the inflation, with all the things going on with the Fed right now, where they actually don't know who's going to be sitting in the chair for the next couple of years. Probably Jerome Powell still, but we don't know. We're waiting for Biden's answer, right? But that actually gives us kind of a silver lining when it comes to Q1 in January, right, for 2022, because the way it is, people make their New Year's Eve resolutions. They want to begin next year, the new year, with eating way more healthy, want to start losing weight, want to become more energized, hitting the gym. You know how it is, right? I mean, I remember every time you go train at the gym in the beginning of January, it's all of a sudden it's full with people, right? But then after like 10 days or 2 weeks, it's basically empty again. You're there alone. And I think it's the same with food, though, especially with food, that you want to start eating more healthily. And I think that's where Tattoo Chef is perfectly situated, having a focus on health. And there's something that I feel that most YouTubers have actually missed when it came to the conference call, what they talked about. And it's that Sarah talked about the New Mexico facilities that actually they're going to start only producing vegan options from that. And that makes me, being vegan and all, really happy, because I do believe that's where we're headed, especially when people think about eating more healthily. eating more sustainable, right, then it is 100% vegan, 100% plant-based. That's going to be the choice you want to make. So I think that could actually benefit them in the long term as well, that they focus, they try to become more of a pure play. Now, this doesn't obviously mean that they're going to become a pure play now. That may take another 5 to 10 years, who knows? But I think it's a great new step with this new facility. So I'm really happy about that. I'm hoping for the same thing at the Belmont facility. So if we wrap this up, I mean, still 44% growth in today's climate is still incredible numbers. Yes, I'll be honest, I was a bit negative in the beginning, but then, when you let it sink in and you think about the reality of this, I mean, this is great numbers. And let's not forget, this is a very young company, right? They've barely begun on their journey, and already now they're starting to hit a lot of the larger retail stores, and at some of them, like Target, having like 25 SKUs, and it might be more with time. Again, that's a great achievement. And I think they will actually power through this volatile time that we all have right now, and they can certainly afford it if they need to, given that they have almost 130 million in cash position, which is a lot of money for such a small company. And if the queen of investing, our all favorite Cathie Wood, is correct, we will see this inflation in 6 to 12 months starting to dampening down, right? And that means that these growth companies, these disruptive companies, they're going to probably start to rocket again. So that's something to look forward to. All right, folks, that was it for today. I truly hope you got a lot of value from today's video. And if you did, make sure to smash that like button and help me out. And if you want to keep getting more information regarding Tattoo Chef or Beyond Meat, the very good food company, or Oatly, make sure to subscribe. But don't forget that bell button. And if you want to be part of our free Discord channel, make sure to take a look down in the description. Thank you, folks. I really appreciate your help. And as always, this was not financial advice. These were just my own thoughts and opinions. It's important to do your own due diligence and invest safe. Folks, have a great Wednesday. Hope to see you soon, and peace out.